Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, April 19th. Just a reminder for you from last week. I've got a busy morning ahead of me. As soon as I wrap up this video and publish it, I'm going to be off to the races to get my second Moderna COVID vaccine shot. I'm number one on the board for this morning, so time's going to be tight. So I'm going to be off to do that, and then sit and see if I get any side effects. There has been several traders in the group have already gotten their second shots and said they, experienced some symptoms or flu-like symptoms afterward, kind of knocked them down for a day. So we'll see about that. And I think it's just luck of the draw. If it hits me, I will send out a note. If I think it's going to keep me off the desk for any period of time. Otherwise, I'll be right back to it. And just as a side note, I reached out to a friend of mine that I hadn't spoken to in a while over the weekend. And just as a coincidence, she had just gotten out of the hospital. COVID put her in the hospital for a little over a week. 50-year-old lady, no comorbidities, otherwise healthy. Put her right in the hospital, and apparently not too far away from needing to be put on a ventilator, which she absolutely refused. I mean, I think they wanted to, but she said, no way. It's bad when you go on a ventilator. There's a high percentage that you don't come off. So I just wanted to throw that out there. Don't let your guard down on this thing. It's still out there. It can still bite you. And I don't think it's something you want to get. And who knows how it decides, how hard it strikes each person. But like I said, you wouldn't expect a 50-year-old, healthy person to end up in a hospital for over a week with this thing. But yet that's what happened. So I'm gonna run the gauntlet with my second shot and then see what happens from there. Okay, on to markets. 6:32 in the morning. ES and NQ are flat. Looking at the futures, small caps are down about 0.6. Precious metal, silver and gold up about 0.5%, and copper up a whopping 2.4% here pre-market. A lot of the headline news being dominated this morning are twofold. Cryptocurrencies had a wild weekend, going from about 65,000, which was the high of last week with the Coinbase direct listing, and got as low as 51,000 yesterday on reports that the Treasury is going to go after unnamed institutions for crypto money laundering. So that volatility has dampened out a little bit. The last I looked at Bitcoin is around 56,000. But that's always been the risk. Everything's fine until Jay Powell and Janet Yellen say it's not fine. So that's the risk with crypto, that these sovereign governments aren't going to sit idly by and watch the currency they run be marginalized by a digital currency they can't control. So that's way beyond my pay grade, but it is out there and it is affecting markets in the sense that, I view crypto as a risk-on asset and a sentiment indicator that, if all of a sudden there's some massive turbulence that, hits the crypto space, it could ripple into the Qs and the market in general if there's some major turbulence. Also, Peloton is in the news. The Consumer Product Safety Commission is out with a report this morning that small infants could die if they get trapped under, or get sucked in or trapped underneath their treadmill product, and the company is pushing back against it, as you would expect. But prices are off about $10 to $12 pre-market on that news, so that may be something that you want to trade if you're, if you're active intraday trader and are nimble enough and motivated enough to do it. You may want to take a look at that one. So anyway, let's get into the charts here. SPY 2 hour, we just keep grinding higher here. I have moved up a support line to about 416. I think you just stay long here. Are there things that concern me? Yeah, there always are things that concern me. We haven't been able to take out this little downtrend line on momentum. So you can see all these higher highs have come on lower and lower momentum. That's the definition of bearish divergence, right? You got higher highs in price and lower lows in momentum. That's usually not a great thing, but we don't have any sell signals. So to step aside right now and getting, terrified of this bearish divergence, I think would be a mistake. We've got levels. We've got support levels that we've built in. We see our gaps. We know where the breakout levels are. And if we see price start to roll over, then we can be prudent about our positions and take, rapid action depending on our time frames. And, time frames are key in any kind of trading. Are you trading for, the 4 o'clock close? Are you trading for the Friday close? Are you trading, in your IRA for 40 years from now? Everything is absolutely relative. So you've got to know your time frame. But, speaking short to intermediate term, I think you got to stay bullish here, and definitely longer term stay bullish, because even on the short term indicators, we don't have any sell signals. And I'll be the first one to tell you that we have sell signals. So as far as strategically in your positions, keep on the items that you're long. If and when you see price advance, roll your stops and strikes higher. Don't sit there with embedded gains. Let's say, just for example, back here, you got 405 strike SPY calls for May, and now we're $13 higher. Don't sit there with $13 of embedded gains in your position, because you wake up one morning to a massive red bar for whatever reason or no reason. It's going to really hurt. So continue to roll that up. Stay bullish. Roll those 405s up to 415 or 416. Go to even money, and then just stay long. Qs, very much the same thing. Grinding higher. We've got the highs from Friday in and around 342. As we break, if and when we break to new highs you got to buy. So then you can buy against Friday's high at 342 and stay long. I think you should expect, just regular intraday volatility against this gap down here at 339.50-ish. But above that, I think you stay long. If price moves into the gap, you can take a tactical short and look for that gap fill from 339.32 down to 336. I mean, that's a worthwhile, what is that? Nearly $3. So, I mean, that's a worthwhile trade to try and take. But in general, look for long entries. That would be a great place, if you got that gap fill, to get long at 337 and then look for a move back up to 342. And of course, in case you're wrong, you've got to stop right below where you stop out if price keeps going south. Totally different chart on IWM. A lot more chop, a lot more indecision. We had this breakout here last week of this consolidation triangle. We went up to this 225.50-ish level, got rejected, came back to 223 to back test the downtrend line, and then back up to 225 and then back down. Pre-market, we are back down here right at 223. So, I mean, if you're nimble and active, 223 to 225 is just chop. You know, and you're welcome to trade that chop. Get long at 223 with a stop below. Get short at 225 with a stop above. And that chop will eventually resolve itself. But until it does, that's a trade. And if you're a guy that wants to sidestep all that, then you got to wait for a breakout above this consolidation range around 225.50, or then below 223, and look for a gap fill here and a gap fill here on the way back down. But for right now, I would say the price action still favors the bulls. Why? We're above the pivot point at 223, and until we lose that, the bulls still, I believe, are in control. You're above the downtrend line. And like I said, you're above the pivot point. PPO is also above 0. RSI is also above 50. So odds favor a move to the high side, but you still got to get price confirmation. Here's the 30-minute chart, and you can just see, you know, the multiple rejections here at 225 and the multiple times where 223 has held. If you are new to the channel, I really appreciate you stopping by this morning. I do my best to give you and the rest of the viewers very objective, tradable locations where you can put a lot of trust in those locations and really focus in on your execution around your trades. And just having those levels, it's my hope that they become very powerful for you and that your execution improves and putting more money in your pocket. So if you appreciate the commentary and having these levels, please hit the subscribe button and the alarm bell. You won't miss a beat going forward on my content. Also, jump over in the show notes where you can register for all my content and get my midday notes and trade ideas sent directly to your inbox, and you won't miss a beat. Also at the website, you'll see a lot of articles on trading psychology and other tips and tricks that'll help aspiring traders at all levels. If you've been with me a while, I really appreciate you sticking with me. Do me a favor and hit the like button. That lets other people know you find value in the content, and certainly pass along the link to others in your trading network. That'll help me build subscribers and get the word out. So I really appreciate that. Moving on to the FATMAAN names. Facebook had broken out above this 310 area and has since dropped back below. Several of us have long positions against this 305 original breakout area. We talked about on Friday a chance to take some profits here at 310 and then hope for a breakout. It has since pulled back into this, this chop area between 305 and 310. What the bulls really want to see is a breakout above 310. Anything above 305 is bullish, but you got time frames involved. For me, I have calls expiring Friday. So this has to move pretty soon for me. I'm not going to just, wait around while it chops. It's got to break above 310 and go. Otherwise, I'll have to close out and reset. If others of you, are long out in time, that's fine. Just stay long against 305. If price loses 305, you got to get out, because it should not go back in to this prior trading range down here below 305. The bulls really need to hold the line right here. Apple, nice uptrend, getting some consolidation. I think this one is really simple. Short-term traders can stay long against 134 and look for a move up to 137. There is the potential for a further pullback into these to fill these two gaps down to 132 and then 131. But I think if you get those gap fills, they are logical places to try a long against the bottom of the gap. Sure, you can try a tactical short, below 134 or a move into the gap, look for a move down. But I think the aim should be get a good long trade location, because the market says it wants to go higher, at least at this point. So set yourself alarms on the downside, or I should say stops. If you got to take a paper cut, so be it. But I think looking for long entries is what you want to be doing. Tesla is also in the news this morning. I haven't looked at the price action, but there was a crash in Texas that killed 2 people in the car when onlookers said, quote, there was no one driving. So I don't know if that means, they set the thing up for autopilot and they were in the back seat taking a nap, while this thing cruised down the road, and then it crashed and it killed them. But that's the headline, that a Tesla with no one driving crashed and it killed both passengers. So that's in the news. As far as the price action, we had seen this consolidation bull flag. We got the breakout, quick run up to 790. We put on the fibs and we got the half back long right here at 725. And now we're trying to bounce off of that level. I think the setup is clear. You stay long against 725. And as long as it's above 725, the breakout is holding. If it loses 725, you're coming back to 710. And I think that's the last line in the sand. If you lose 710, this whole thing was fake and you're back into the trading range. So I think you want to see 725 hold and you got to see 710 hold. So that's where that's at. Microsoft just keeps grinding higher. Move your stops and strikes higher if you're long. I think you stay long against 259. We had this pretty well nailed on the way up here on this breakout from 235 way back when. Got a couple big impulsive moves, and now it's just grinding higher. We do have this little gap here in the 257s, but nothing substantial. I have penciled in this little trend line here on the 60-minute chart. You can definitely stay long against that. If you break that trend line, you may get a pullback into 259. But as far as I'm concerned, everything's remaining bullish. Again, yellow flag, making new highs with lower momentum, making new highs at lower RSI. That's bearish divergence, and not something you really want to see, but price is grinding higher. I don't think you step out here. I certainly don't think you short here. That's been a losing trade for a long time for a lot of people. Don't try and short new highs. New highs you got to buy, and you got to stick with it. Set your stops below, but stay long. Amazon free 50 club on Friday delivered low of 33.55, high of 34.06, but closed below 3,400. If you remember, we talked about last week on the weekly chart, we are looking for a weekly close above 3,400 for an all-time high and a breakout. A breakout on the weekly chart above 3,400 should open the door to 3,900 on the weekly chart. Did not get it Friday. And I mean, you might say, well, it's only 50, it was 50 cents short. That's just the way it goes. 3,400 is 3,400, and it needs to break above and hold it on the weekly chart for that breakout to be secured. Resistance is resistance until and unless it's broken, and resistance held. Today, above 3,400, get long and look for 3,450. As long as it stays below 3,400, I think this 3,350 remains a possibility. And the free 50 club has been doing a great job on these $50 increments, both intraday and longer term. So use them as your pivot points. So today, 3,400 is your pivot. Google, stay long above 2270. I think it's going higher. We've got a measured move target in the 2,400 to 2,500 range on different time frames. But as long as it holds 2270, no reason to worry or be panicked. If you want to worry about something, worry about the negative divergence. Higher highs, lower momentum, higher highs, lower RSI. That's present on a lot of charts. So I wouldn't be overly concerned with anything above 2270. If you want to get concerned, you can get concerned on a break of this uptrend line around 2260. And if that happens, we could come down here into 2240s and possibly into the 2230s. So watch that. Netflix. 552.50 and 542.50 have been working great. Gave you great trades the last 3 days. This was Wednesday. A move down to support. Thursday, a move up to resistance. And Friday, a move down to support. So, I mean, that's the essence of intraday trading. $10 moves in each direction in 3 consecutive days. I mean, that's what the levels are for, and the levels worked great for guidance. Now today, you stay long against 542.50 and you look for a move to 552. If you get a breakout above 552, then you're looking for more or less 562.50. That'll be a $10 move and potentially up to 565. If you lose 540, then 532.50 becomes your target down here. Notice that I shifted this support level down just a couple bucks because that seems like it's been holding it at 540. So you may want to fine tune that a little bit on a 5-minute chart or whatever short time frame you're using to trade with intraday. But the levels in general have been working great. And if you're more of a long-term trader, you can look at it one of two ways. Wait for the breakout of 552 to take a long position with a short, a stop just below. Or if you get a move back into 540, then you can get long there, place a stop just below, and then you can stay long against 540 and then hope for a move up to 552 and a breakout. Then you'd have a really nice trade going. Review a couple other charts here. OLLI is something that we're long. We got this breakout. We got a nice move on Thursday, and then we got some follow-up on Friday. What I want to see is some follow-through now up into the 100 area and a move up into earnings. I don't have that earnings date handy, but make sure you look up when it is. We don't want to hold through earnings. I believe it's in May, so be aware of that. But stay long, OLLI. SMH, the semiconductor ETF. We got this move right here. We had 242.50 alarmed, and then we got this impulsive move up to the top of the range, and that was a great trade for us. But if you look at the whole structure, this looks like an impulsive bull flag move. Here's the flagpole. Here's the consolidation with PPO and RSI pulling back. What I think happens here, if the market stays constructive, is you get a breakout of this flag right here in the 253, 254 area, and I think you get an extension of this move. And I haven't done this on the daily chart, but what I'd like you to do on the hourly chart is set yourself a long alarm. I mean, let's say right in here at 253.50. Let's split the difference. 253.50. Set yourself a long alarm, and if you get that alarm, you can fine tune it to, when and where you take a long entry. But I think if things stay constructive, this is going to play out to be a huge bull flag. And remember, all the semis have yet to report. So let's say we get this breakout in anticipation ahead of earnings. SMH would be something we could stay long in and not worry about, oh my God, Texas Instruments or, all the other names, AMD. We don't have to have that single stock risk. All we need to do is be long the group with a view that as long as the ETF has broken out, we can stay long and hope that there's positive earnings reactions to all these names during earnings season and get a follow-up move to SMH. I like that trade. I like this setup. We haven't got the trigger yet, but I really like the idea that this is going to pop ahead of some of these earnings if the market stays constructive, and then we have a chance for this big bull flag to play out. XOP, this is the oil services or exploration and production ETF. And you can see here that we had this high, and now price has pulled back to a key level here at 76. I don't know which way this is going to break, but it is certainly a point of interest for both the bulls and the bears. On the bearish side, you get a break below 76, and I see a quick move down to 70 because there's not a lot of people home here below 76. And for the bulls, they want 76 to hold, and then this downtrend line getting taken out, and then resumption of the bullish trend. So, is this just a little consolidation pullback, or is it rolling over? I think it's 6 of one, half dozen the other. You got price below the 8, 20, and 50-day moving averages. That's bearish. I mean, there's no way to spin it other than bearish. But above key support, and support is support until it's broken. So whether you're a bull or a bear, this 76 becomes really, really critical. And if you're interested, in an oil related trade, you're right here at a decision point. And I think there's $6 of downside if it breaks. And if it holds and breaks out, could be right back up to 90. So either way, could be an important and a good chart to watch for a trigger on either side. So set your long alarm and set your short alarm if you're interested in trading XOP. Okay, let's wrap it up there. Wish me luck at my COVID shot, and hopefully I'll be back in the chair before noon, depending on the line. I mean, I'm first up, so hopefully I'll get through right away. Watch crypto, watch Peloton. The charts are still bullish. Don't try and be a hero and, try and short the highs. New highs are bullish. They're not bearish. So keep that in mind when you're watching charts today. Let's wrap it up. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.